or sustainable, and sustainable becomes concerning when it becomes embedded in wages, particularly. And we are starting to see some effects of that. We've particularly when we look at what has been happening with the employment cost index numbers as well. So the Fed has, while we've not reverted back to the 1970s, whip inflation now attitude, they certainly have it very high on their radar, and this is primarily contributing to this increased pace of interest rate hikes and a sense of urgency they've got to get this done. To, in essence, start to slow down the demand for goods and services, get interest rates, back to some semblance of normal, and remove the accommodation that really is no longer probably needed to sustain the economy. So the impact on interest rates that we've seen here, the yield curve, of course, compared to where it was last year, is quite a bit higher, particularly within the space that we function in, which is the 5 years or less, whereas we can see with the orange arrow there that interest rates in that space are up about 0.8% over the past year. Longer term rates are not have not increased quite as dramatically, again, as the market reflects, of course, a longer-term view of inflation and economic growth. But inside of the space that we are operating in, as we could see, the market has priced in those Fed increases that are expected now to occur starting in March, and they are also pricing in the Fed getting that overnight rate up to 1.5%. So clearly, as we look at investing monies for the county and for our clients, and in view of this shift in the Fed's focus and the market's reflection of that, we are looking to somewhat shorten up portfolios in this environment. So therefore, we have more maturities, more funds being available to reinvest as interest rates are rising. Continue to rise, as we believe, and be able to take advantage of that for the county. So looking at where we were at the end of December, on page 9, again, about $160 million invested in securities. The weighted average yield on those securities stood at 0.93%, which was up a little bit from where we were at the end of the September. Asset allocation, we're taking advantage of all the asset classes that are permissible under Ohio Revised Code and the county's policy. And the maturity distribution, as we can see, prior, as we had discussed, our focus was to have about 40%, 35 to 40% out beyond the 3-year maturity mark. Excuse me. We're now at 34%, so we will certainly be looking to let those securities roll down. For the quarter upcoming, we have about 10 million maturities that we will be looking to reinvest, again, in a better interest rate environment. Excuse me. So certainly, with a portfolio for the county, over time, we will slowly be able to take advantage of this rising interest rate environment. And of course, that will help to move up that yield on the portfolio. Any other questions on this?
Apparently not. Oh, yes, Michelle.
Thank you. The mix of cash and securities, is significantly more in cash than securities. What do you think of that mix as it is right now?
We actually, Treasurer and I had a brief conversation here about that right before the meeting, and we are working towards identifying really what's a good balance for the county to reduce that amount of cash. We don't want to, put things in a position whereby something would have to be sold out of the investment portfolio, but in the same token, we do recognize and believe that, yes, that cash number is, and has been for some time, much higher than what may be in the best interest of the county. So we would look to, as I was mentioning, go here by next quarter to have a different direction taken on that.
Very good, thank you.
Mm-hmm.
And I would just like to say something. I would just like to say that I'm just so impressed by Meter Investment and Eileen Stanek for all their knowledge and expertise in the various investment options that we've discussed. And my number one concern is safeguarding county funds, but I also want the best return with the lowest possible risk. And Eileen has just been instrumental with the advice in this COVID world, with where it twists the economic environment. And I just want to thank you for crafting the best strategy that we could come up with.
Thank you. We really appreciate that. Yes, I think it's a true testament to our interests are aligned. Safety first.
Okay, I think we're in good shape. And as always, I appreciate the detail and clarity of your reports.
Thank you very much. I appreciate it.
Thank you. Okay, if there's no other new business to come before us, I will entertain a motion to adjourn this meeting.
Move to adjourn. Second.
Discussion? None being heard. Roll call, please.
Commissioner Young,
Yes.
Commissioner Hamercheck,
Yes.
and Treasurer Zern, yes.
Very good. This meeting stands adjourned. We are going to take a brief pause for some technical rebooting of our systems so we can continue to reliably broadcast. So with that, thank you, and we'll be coming right back shortly. So stay tuned.
Channel identification.
Yes.